Hey everybody, been a crazy busy day ever since 5 a.m. Lots of terror and fear in the market. But you know what? Crypto does not care. And let me show you why. But you know what? It'll be a fun story, including some very strange image which got inserted last minute into the deck. Big thank you to Sanjay for sharing. After the fact, I think I saw it, and it's like, it might be too rude to share. So we'll just go through it real quick. We have a lot of stuff to cover. And today, it is OCTA. We're going to look at on-chain data and everything else. So thank you all for being here. Crazy day. As usual, we run into burning buildings on this channel. And let's jump in. So the topic today is FUD fades, crypto rises. And we're also going to talk about Chainlink. I haven't talked about that a long time. Zeno, Dave, thank you so much. You guys are incredible. Thank you, TND, Tesla, and K8 for helping us be safe out there. So let's jump in. And of course, this is always edutainment. If my eyes look a bit red, well, you know why. And subscribe to the channel if you want to amplify your intelligence. So let's go. Let's look at, first of all, the last 7 days in the crypto market. Despite all that has happened against Bitcoin, you can see that Ethereum, Solana, Avalanche, XRP, Tron, Litecoin have all beaten Ethereum over the last week. Binance got a big kick in the teeth, but we know why. We'll talk about that as well. Weird stuff. Let's look at dollar-based. And again, it's a bit of a moving target right now because things are all over the place. But Bitcoin just over 27K, down 2.66% for the week. And Ethereum down only 0.6% for the week. And many others, of course, hanging in there, not doing too bad. It's weird. There's so much FUD being thrown at exchanges like Binance and Coinbase and altcoins. And XRP is dark green, so you can't make this stuff up. It's a crazy world in which we live. Okay, now today, there's so much bad news. We always start with what there's most of. So we got 45 nuggets to get through. We'll start with the bad first. First of all, it was a rough week for the big three. Thank you to the SEC. Again, Ethereum down, according to this chart, minus 4%. But of course, this is from K33 Research, and it was done a few hours ago. Therefore, it's out of date. Ethereum rebounded very, very strongly indeed. In fact, looking at Ethereum live here, it's now 1880. Big move. That's 60 points higher. Bitcoin down 7%. Now it's 27K. And Binance down 10%. Now it's about 300. But it just shows you how fast this stuff moves. It's incredible. That's why we left them in there. But again, talk about a V-shaped recovery from all the fear. Let us talk about what happened as well over the last week in terms of money flows. In a repeat of the last 5 prior weeks, the focus remains on Bitcoin. We are down 6 weeks now in a row, which is not good at all. But if you look at the outflows in short Bitcoin, also down $11 million, which is kind of good. But it also matches how much the Bitcoin funds are down, $11.5 million. And again, this big outflow is bad. 3% of total assets under management in these funds, etc. So that is not good. Now, there is a tiny little bright light there. Litecoin up $500,000, and XRP up $100,000. The rest down or flat, which is not good. Solana down 300,000 after having a breakneck year in terms of money flows. This is what it looks like in another visual. You can see the 6 weeks down, totally down so far in this 6th week was $39 million. And again, it's rare you see 6 weeks straight down, but that's kind of the overall sentiment. Let's look at some other data. This is the Fear and Greed Index. Again, we dipped to fear. We spent the last 3 months, since early March, we were in neutral or even greedy at one stage at the very beginning of May. Now it's flipped back to fear with a score of 44. And that means the market is concerned and alarmed. But it's not reflected in price. We'll talk about that in a minute too. Now, there's some interesting stuff happening on chain. Let's look at this one. This is from Glassnode. This is a sell-side exchange inflows. So a little bit of kind of a bad news. Now, exchange inflows can be used as a measure of buy-side and sell-side pressure in crypto markets. This for Bitcoin and ETH. The exchange inflow represents sell-side pressure, while stablecoin inflows represent buy-side pressure. Negative values, which is those red little bars you see at the bottom of the chart here, suggest there's more sell-side pressure than buy-side pressure in the market. And since the beginning of April 2023, there's been a net sell-side regime in the crypto market, and this is a distinct break from the huge buy-side pressure we saw in all of Q1 and part of April 2023. That's when it went from under 20K to 30K. And since then, it's been kind of languishing around that 27K mark. But yesterday, I did talk about the importance of being above 26.8 and staying there. And right now, we are above that. So when we went down to 25.8, that's the point of where 26.8 is where the majority of people bought Bitcoin. The biggest clump of buys are at that level. And when that goes more than 1,000 below their price, some people consider selling. But that did not happen yesterday, which is good. Now, I have been talking a lot as well over the last couple of weeks that, you know, at the end of the day, the US doesn't really matter. And when I first said, you know, 86% of all of the spot volumes now coming out of Asia, people were like, you're crazy, that's impossible. No, it's not. And here is another reference point of exactly how important Asia is and USA isn't. This is the year-over-year Bitcoin supply change based on geographical regions, and it shows that exact similar divergence to stablecoin supply. US entities have lost dominance in Bitcoin supply, down 11%. And you can see here, and this is all since kind of mid-2022, like the last 12 months, European markets have been fairly neutral over the last year, and Asian markets have seen a significant increase in Bitcoin supply, dominance up 10%. Basically, what this chart tells you over the last year, anything the US sells, Asia buys. So what do they know that we don't? And why is the US selling? Well, and this is kind of the crazy thing about all the FUD spread by our friends. You know, these two people, Elizabeth Warren and Gary Gensler, thanks BFFs. You know, they've all been planning and scheming, etc., to put the whatever kibosh, whatever you want to call it, on crypto using choke point 2.0. It's a risky business. It's not backed by anything. It causes environmental, whatever. It can be used for illegal activities. Those are narratives to kill it. But the beauty is they can't. No matter what they do, whenever they try, it makes it stronger. And we saw that today in the numbers, in the strength. No matter what they throw at it, it makes it stronger. Because now people don't trust that they have your backs. This guy had multiple meetings with Sam Bankman-Fried, scammed the whole planet, fooled everybody. Okay? And now he's trying to come in as a knight in shining armor and a white horse saying, I'm protecting you all. It's too late for that. We know where this is going. Anyway, these are the SEC targets. Sorry for all the bad news. But so far, again, this was as of early this morning, but all have rebounded completely. In fact, Bitcoin is up. It was down as low as 5% since the SEC targeted Binance yesterday, bounced back and more. Same with all the other names there as well. Worst hit was Sandbox and Decentraland. They were named as well. There's about 61, 62 different crypto names. So really, there should be 24,000 crypto names named to the suit because everything is a security, apparently, other than Bitcoin and Ethereum. So who cares? I mean, they're just stating the obvious stuff we've known for a long time. Now, this is the top 50 over the last week. The top gainers. We did see Tron on the chart up front, up over the last 7 days, 4%. XRP up 2%. Quanta up 1%. And Tron has had a great year, up 44% year to date. ICP down, second week in a row, down another 12%. Filecoin down 12%. VeChain down 11%. And I've had so many requests for why I don't do it. Should I buy an ICP? Because the tokenomics are terrible. That's why. Always been the same answer. That's why we don't touch it, and that's represented here in the numbers. Now, after all that bad news, we get to talk about some good news. Woohoo! And there is some good news. First of all, the 200-week moving average. A lot of people got nervous when Bitcoin popped its little head below. It took us a long time to get above it, and that happened in the early part of Q1 2023. And we thought, once you're above the 200 week, you stay there forever. But it did dip below that yesterday briefly, and now it's back above it. So this is such a critical layer, and we will watch that very carefully as we go forward. Keep an eye on the 200 week. In addition, I touched on this yesterday, just to mention again, the 10,000 plus whales continue to accumulate Bitcoin. Everybody else is rattled and selling. And again, watch what the big money does. That's what yesterday's video is about. I'll add it there if you missed it. Also, despite the SEC going after altcoin, this is incredible. It shows you that kind of the crypto market just brushes it off the shoulder. Despite going after altcoins, we moved into alt season. It's insane. We're now at 51 over the last month. That is more than half of altcoins are outperforming Bitcoin. And we saw that as well right up here at the very beginning of the show. Boom. So this is kind of staggering that with all the attacks on altcoins, we're moving in. But again, it's probably because US doesn't really matter anymore. All the action is coming from overseas. Remember that, everybody. Don't freak out because some stuff goes down in the US. In addition, talk about whales stacking Bitcoin. Well, they're also stacking Ethereum big time. If you look at this is from Sentiment. Ethereum's top 10 largest non-exchange addresses, non-exchanges, these are individuals, hold 31.8 million ETH. And that is exceeding the previous all-time high back in 2015 when it was just, big whales. So what's going on? What do these folks see when they are stacking ETH like crazy? Well, it was just supported not only by, of course, the SEC, nobody cares, but not going after them anyway makes it even more of a value proposition to hold some ETH, especially with the actual staking rewards. So this is very, very positive for ETH as well. Now let's look at some ETH ranges on some charts over the last, year to date. And the price of ETH has remained pretty flat since mid-March. Ranging kind of like 1744, if you can see that on the kind of like the green line on the chart there, and up to as high as 2128. It did have that little spike, but since then the high has been around 1919, believe it or not, $1,919, and we're not too far away from that level right now. But trade volumes have been very depressed, and DeFi usage has become increasingly automated as well. Maybe that's related. I do have a theory in traditional markets that volatility is coming down because there's so many algos and bots trading as well. And that kind of pulls away the volatility of the actual trading. So maybe it's the same here. In addition, let's look at some stablecoin balances, because what's very important about this is this chart shows you the relationship between stablecoin balances and Bitcoin exchange balances. And as the number increases, investment withdraws from Bitcoin. And so far, we have had that big spike where people were dumping all of their stablecoins into Bitcoin, and then they harvest them. So basically, year-end 2022, early 2023, we saw the blue line go down. That is people basically burning their stablecoins for Bitcoin. And now we've been flat for the last month and a half. And again, I call this no man's land. It's not down the bottom, which means there's more stablecoins to spend. There's more buying pressure that could happen. And at the same time, the Bitcoin price has stayed relatively high, still off that 30K over the last couple of months, but still, again, no man's land. But we watch this very carefully to see where things are going. In addition, this is another one that supports the importance of stablecoins. Think of that as the cash that buys crypto, drives the price up. So if you look at this chart here, this is the stablecoin aggregate supplies. And again, recent stablecoin outflows have driven primarily by USDC and the third BUSD assets, because people seem to kind of got out of those assets. Pancake Panda, appreciate you. You can see that BUSD supply has fallen by about $12 billion in 2023, and USDT has absorbed a significant proportion of these outflows, pushing its supply to a new all-time high of 83.1 billion. These guys are the ones that are spending 15% of their profits on Bitcoin, which could be sucking up 6% of all that Bitcoin being mined. In addition, they're getting into Bitcoin mining too, so it's important to track this as well. Now, let's talk about some other altcoins as well. I was just on Paul Barron's show, and he asked me a lot about Solana and Apple and Metaverse and stuff like that. But here, one of the charts I did not show on his channel is the fact that it looks at transaction counts. And Solana has 24 times more daily transactions than Ethereum and 57 times more than Bitcoin. And that's only going to increase. Basically, the Solana blockchain runs about 90% of all transactions that happen on all blockchains. As crypto gets adopted again, it's still, people are still coming out of the bear market. Not that many are on top of it yet. But as they do, this transaction volume is going to go crazy. And that'll be interesting. In addition, I'm not the only one that sees that. So does Van Eck. They have a theory. They have a group called DAR, their Digital Asset Research Group. I hope I didn't screw up that acronym, but they believe that there is a 10x upside for Solana by 2025, which I think is quite conservative. Going from 20 to 200 isn't a big deal considering the previous all-time was 259, but that is still very positive. And they talk about the transaction processes, and it is the most affordable blockchain by far. Transaction fees very much under a penny. Growing ecosystem, wide breadth of dApps, etc. AMMs like Radium, Serum, Orca, NFT marketplaces, Magic Eden, Solana Art, and GameFi projects, Aurora, etc. And in terms of upside, once you layer in kind of the assumptions that the penetration rate and where it is and how Solana really handles 90% of all open source blockchain activity, the upside becomes much higher, but with a much higher level of risk as well. So that's the thing, and that's what the team at Jump Crypto are working on, is to really robustify the chain so it can continue to grow as the actual crypto market grows as well as we go forward. No idea why my phone is talking to me. I must have said something that sounded like something. Anyway, let's talk about the SEC actually making the case for Solana. This was kind of funny, and a shout out to Bill King out there on Twitter and others. But here it talks about, it's as if they're making an advertisement for Solana. A couple of bullets here from the legal papers. Solana Medium blog, Yakovenko supports upwards of 50,000 TPS. How bad is that? Solana team comprised of pioneering technologists. Okay. What else do they say? It is extremely fast and extremely inexpensive. Good. Around 10,000 times faster than Bitcoin, 4,000 times faster than Ethereum, 35 times faster than Ripple, and even 2.5 times faster than Visa. I mean, it was just the irony of this is they're evidently incriminated for sharing high-quality technical specs in a chain, and this whole legal complaint reads like an advertisement. I don't know. I don't get it. I don't get many things in this world anymore. It's all very confusing. Speaking of Binance, people were fretting, and of course we should never keep anything on exchanges just enough to handle some small business. But despite so far what people thought would be a ton of outflows, the balance of Bitcoin held across all of the Binance exchange addresses remains extremely robust at 694,000 Bitcoin, only 10,000 shy of the all-time high of 704,000 Bitcoin. So we conclude that the recent flurry of outflows has only marginally affected the balance on exchanges. People don't seem to care. They're not freaking out. They should. You shouldn't have, if you got 10 Bitcoin, you shouldn't leave it on an exchange because there's some kind of clouds on the horizon. But people don't care. They're still leaving it there, and they have not been impacted. Now, in addition, this just popped out right before I streamed. A big thank you to Sanjay for sharing. It's from Eleanor Terrett. The SEC Gov has asked for a temporary restraining order to freeze Binance US assets. Now, I tweeted back immediately, not sure they can do this. We'll talk about it today. But this would be a really weird, they're trying to sue Binance, and they're also trying to block individuals' assets on the exchange that has been running for years and years and years and years, and all of a sudden they want to freeze it. It's kind of bizarre. I'm not sure they're going to get away with that, especially with how they're trying to attack everybody at the same time. And when you have somebody who is attacking everybody at the same time, it looks suspicious. And believe me, people like Brian Armstrong and CZ, they're going to fight this with big, big war chests of legal funds with the best pitbull attorneys on earth to fight the SEC, just like Ripple did with XRP. So it's going to be fun to watch. It's going to take years to play out. That's what people don't understand. This isn't going to just take the crypto market down. Anybody with half a brain knows it's like, it's a nothing burger. Move on to the next thing. Now, a survey from Sentiment as well pulled this up 7 hours ago. Is Binance in serious trouble? And, 1,000 votes here. Yes, it could shut down 12.7%. Yes, but just monetarily. Not sure what that means exactly. 18%. Not serious. Minor fines. The majority, nearly half, 43.5% said that. And no trouble whatsoever, 25%. So you can see here, between the 45 and the 25, you have a big chunk of folks, 70% saying nothing burgerville. I should have added nothing burger here. Thank you, Dirk Diggler. We've got Dirk Diggler in the house. Can you believe that? Now, after all that FUD eradication, let's talk about Chainlink. And I haven't spoken about those guys in a while, but this is exciting. Swift. Swift, by the way, is the unit that kind of is trying to block some on-ramps for crypto in the past, apparently. But Swift is testing blockchain interoperability with over a dozen institutions, including big names like Citibank, etc., all the big top banks, BNY Mellon, BNP Paribas out of France, etc. Now, their goal is to remove friction and overhead for firms that want to interact with tokenized assets. As I say, the world will be tokenized in the future. No ifs, ands, or buts, just a matter of time. The big banks want to play in this game. They don't want to be carved out. Therefore, they're jumping in and they're working with Chainlink. And Chainlink will provide connectivity across public and private blockchains for these experiments. They call them experiments, which I think is a bit of a risky word. And Swift believes that there will be a ton of different blockchain platforms that can hook up and link with Swift and these different protocols across the bar. And this could be huge and very, very exciting. Hello, Bill. Hello, Priya. Thank you so much. But also, I do believe this could breathe new life into Chainlink as well. So it's been kind of floundering during the bear market, and so far this year, floundering. But if they can start getting more adoption, and if people start using Chainlink to pay for transactions and verifications in the Oracle, especially when they move to kind of TradFi and broach between TradFi and crypto in the world, that could be good for Chainlink. So we're going to have another look at that, especially if they burn the supply. There was a time where Chainlink was very inflationary. Now it's around 6%, which is in my wheelhouse of comfort level. So could be good for Chainlink. In addition, let's look at Nasdaq versus Bitcoin. Convergence is complete. Pretty much over the last 90 days, they are both the same at up about 16%, which is interesting. So we always look for that decoupling. We don't want them to follow each other. But now they're following each other again, which is not good. But anyway, we'll take it. As long as they're both going up, we don't care. Speaking of Nasdaq and technology stocks, this is the stock market over the last 7 days. It's running counter to crypto. Crypto is kind of flattened down. And here we have, of course, the crazy news from NVDA last week exploded, but that is mean reverting, thank goodness. Down about 3.6%, but Tesla's up over 10%. Amazon 4%, 3% for Google, 3% for Meta, etc. Even the pharma companies are up a little bit. Apple, 1%, despite their big launch and their big conference, which again, yet another nothing burger. The goggles are ridiculous for $3,500. That's the stock market. Now, let's talk about price to sales ratios and how crazy they are, especially for some AI names. Speaking of Tesla, this is the closest recent comparison of Tesla on a price to sales ratio. I always cover my ratios when I do financial analysis. You look at the correlation between the Tesla price to sales ratio that hit 30 back in 2021 when the market cap of Tesla hit $1 trillion. All right, the price to sales was 30 times. Guess what the price to sales of NVIDIA is at $1 trillion? 35 times. So it's kind of funny how these ratios pop up. But then during the big dip, the beautiful, glorious opportunity where we got to buy things like Tesla at $106 a share. Now it's 220 something just a few months later. But the price to sales fell from 30 to 5x, which is great. Big thank you to Charlie below for this beautiful chart. Also, you can see how the market cap came down, but it's coming back up again. It's now at 627 billion on its way back to $1 trillion, but only at a 7x price to sales. So how does price to sales work across other names? Let's look at the S&P 500, top 500 stocks, where 60% of them are zombies. The average price to sales ratio now is 2.44. By the way, you can actually use this as well to gauge how hotly valued a stock market is over time. But also, the more dominant technology and innovation and disruption, the stuff that we look at, the more it makes up the S&P 500, the higher this ratio will go. That's why the overall trend is up. Now, for traditional people who've been looking at the stock market the same way for 40 years, who don't understand exponentiality, they won't be able to wrap their heads around this price to sales ratio. This is the NVDA one. As I mentioned before, it is nearly 38, 39, and again hit $1 trillion. But this again should also mean revert over time. Everything mean reverts, which is good. Now, a little bit of macro news as well, which is good news for us. That's why it's in the good news category. Before we get to the ugly news, CPI is expected to be 3% by December. This is from the Macro Compass and Bloomberg. And disinflation is not only happening in commodities and goods, but also at last in the services sector, the last one to rise and the last one to fall. And it's evidenced by the ISM services and the NFIB Small Business Survey, which measure expected price pressures in the service sector. And these indicators have historically led trends in year-over-year US core CPI by 6 months. Therefore, if history repeats, CPI will be 3% or less by December. Okay, and that's good news because the Fed is going to take a pause next month. The more time they have, they'll see more and more disinflation coming into their numbers. In addition, speaking of disinflation, shelter. Shelter is the most important component of the consumer price index. It represents about 40% of the index. That's how much people on average spend on housing, as opposed to bread and eggs and stuff like that. But negotiated on-the-ground rent inflation has cooled off significantly since summer 2022. And this official rent of shelter component of the CPI is likely to start declining soon. Remember, the government numbers that they look at lag about 6 months, and they're going to see huge disinflation here as well, especially when something like, I can't remember the exact number, is 21% of all office space in the US is empty. 21%. Stunning statistic. But of course, this is more rent inflation, not commercial. And in addition, a little bit of bad news for the team in the UK over here. But their mortgage rates have just spiked over the last few weeks, which is going to hurt the price of real estate unless, of course, it's all cash buyers out of Russia or somewhere where they buy up a lot of the London property. But you can see here the 2-year and the 5-year track each other very, very closely. But again, bumping up on that 6% level, which is extremely high and will have a huge impact, especially when people are used to paying 2.5%, 3% interest. Doubles the cost, doubles the expenses. And a quick reminder, if you're short on time, you want to listen to these things instead of whatever. We have everything, every slide, all the content in a written report form. It takes you 5 or 10 minutes to read every day, and each one will cost you about 14 cents. It's $45 a year, and proceeds go to our team of writers. And now the ugly news. Sorry about this, guys, but gotta share it. This is the Wreckage from yesterday. Over $300 million in liquidations, mostly on the long side. That's the green, happened across all crypto. So a lot of people got hurt yesterday, hurt hard. And it's just, if you are using leverage, make sure you have enough cushion to absorb it. V-shape down, V-shape up, all in 24 hours. If you had enough cushion, you wouldn't have been liquidated. So remember, only play with it if you have the huge amount of capital to absorb it. Big thank you, Moto, for being out there. Now let's talk about Coinbase, because they are being attacked hard. Cathie was a heavy buyer of Coinbase, unfortunately, in May. She should have been a heavy buyer of NVIDIA instead of selling it back in 2022. But anyway, between that and other things, her timing is just off. But it was sad, very, very sad. The red line, by the way, in this chart is the price today. Coinbase took a big hit today, down about 12 or 15%. I don't remember, just above $50. I actually personally was looking at Coinbase. I'd be interested in being a buyer of Coinbase down around $40. Low 40s would be where I'd be very interested in snapping up some. Other than that, not interested. Other things to buy in. And SEC Chair Gary Gensler has gotten, this is a bit of a rude picture, I may minimize that. But this just in, the SEC has got 10 states to take legal action against Coinbase. Illinois, Vermont, Alabama, Kentucky, California, Maryland, Wisconsin, Washington, New Jersey, South Carolina. They say this is an opportunity to get money from Coinbase, which is shocking. And the final piece of news today is the big unlocks, the dumpage section that I will cover every single week for you all. The big names, big dumpage over the next 10 days, just to reiterate some of them. Aptos, 38 million will be unlocked. Blur, 92.2 million. BitDAO, 92.7 million. It's incredible. The 92.2 and the 92.7 are almost identical. Must be a lucky number to dump on. 3 million for Lux Rare, 5 million for Flow. And then we have 50 million for ApeCoin and $504,000 a day for Immutable X. If you are in any of these names, be very careful because the sell pressure will bite. So with that, everybody, that was the show. That was 48 nuggets. Thank you all for being here. Thank you to the mods in chat. Thank you to everybody, including Moto8 and all the usual suspects out there. Really appreciate you being here with me, celebrating this day of FUD and the fact that the stock market doesn't care. And the crypto market rebounded so well. It was kind of incredible. Back above that 200-week moving average. Thank you all for being here. See you all tomorrow. Bye.